All right, welcome in everybody. Pup here with my bi-monthly office hours. Today's March 31st, it's 7 p.m. Let's talk a little bit about the agenda today. So I'm Danny Naz. You might know me as the Pup of Wall Street. This is my office hours. I run them every 2 weeks. This month, my schedule is a little off, so I'm doing it on Thursdays, but normally I do it on Wednesdays at 7 p.m. Eastern Standard Time. They tend to run about 75 minutes or so. Sometimes we run a little over. And what we're going to do is we're going to do a little bit of a market overview. Going to look at my post-market process, hunting for trade ideas, maybe building a little bit of a watch list, setting alerts, and more. So we'll probably run through about 35 minutes, go over the market and the charts that I mentioned. Then I'll take some chart requests from the room, and then we'll get into our Q&A session. Just to review, I am doing my charting on TrendSpider, options flow and dark pool data. I use black box stocks, and for algo trading using TradyTix. So let me get my screen shared here. All right, let's take a quick look at SPY. Just make sure you're muted when you're coming into the room. And bear with me 1 second. All right. So yeah, let's take a quick look at SPY. So you can see, I was talking about SPY last week while I was doing that live charting session with TrendSpider. And in talking with Jason, I mentioned as we come up to this yellow band of resistance, watch for it to actually act as resistance, and we'll pull back. So funny enough, on Tuesday, we gapped over that level, and you can see that we put a hammer in on that day. Then the next day we came and back tested 458 and held. And now today you could see we closed that gap. It was a pretty hard sell-off into the close. So gap is closed. The resistance I expected in this area came to fruition, and now looking more likely that we're going to back test this 200 simple moving average here. So, you know, when you see this kind of run here, right, we only had 1 day that we pulled back. So very normal to now expect a little bit more of a pullback. And, you know, what this pullback could look like is something like this, where, you know, we're pulling here, maybe we come into this flattening 200 simple moving average, maybe we bounce off of it a little bit. You know, we could potentially make a flag and push higher. Or if we fail here, watch for that 50 simple moving average to scoop us up, and maybe we get the bounce there. So I think it remains to be seen. You know, we have to wait and see where the market heads into tomorrow. We could continue to sell off, or we could put, you know, maybe a consolidation day in tomorrow. But this is very much a day-by-day market right now. The top, I think, for now is in, and now we have to see where we go. So very similar to the to SPY or the Qs, and you could see again we gapped over the 200 simple moving average here, which is in red, and that was on Tuesday, similar to SPY. And then Wednesday, we put in a spinning top right at resistance, right at the 200 simple moving average in our yellow band. And now today we see that sell off again. Also, look at the rejection off the 618 retrace. That 618 retraces off that swing high here and this swing low right here. And so we're coming back to the 50% retrace at 361. Looking to see if we find a little bit of support there. If we don't find support there, then I think more likely we come down to this level right here, 349, maybe 350, right where our 200, excuse me, right where our 50 simple moving average is, and prior resistance that turned hopefully into support. So let's take a quick look at IWM. So very similar story again. We still a bit weaker. You could see we came into our 50 simple moving average. We broke out, but we were unable to even achieve the 200 simple moving average and this supply zone up above. Let me properly anchor. There we go. And so you could see we actually came into the supply zone right here and got rejected. So we're coming back down to our demand zone down here. Very likely we did close the gap here, but very likely we retest this trend line breakout here. Let me actually redraw this or reposition this properly. There we go. So yeah, watch for that or potential the 50 simple moving average is right on top of our demand zone. Watch for a potential bounce there. So let's take a quick look. We could look at some of the names that I had on Sunday's charting session. So Solar Edge didn't quite make it to 339. You could see, what do we got here? Monday, and actually Thursday last week, Friday, Wednesday, Thursday, Friday, resistance at the 339. Monday, spinning top, 339 resistance. Then 2 down days and an inside day today, back inside of our wedge. We do have a squeeze setting up, but momentum is falling to the downside. So just want to be careful with that. Okay, and let's take a look at STNG. This one, we had a bullish golden cross right here, where that's the 50 crossing over the 200 simple moving average. We did trigger our entry over 1946, and we came up to our first target at 2175. So look at what happened here. So we got our breakout, right? We got our back test and we got our bounce, right? So breakout, retest, bounce. I talk about this a lot, the BRB setup. If you miss the initial entry, that 1946 breakout, let's say you came up a little higher, you don't have to chase it up here. Wait for the back test, wait for the retest. You can catch the retest on the breakout if you miss that initial entry and then take it higher here. All right, so just another way, there's 2 entries here on the initial breakout and then also on the retest. So don't feel like if you miss that initial entry on the trigger that you have to chase. You don't. It's actually better not to chase there. All right, let's take a look at KBR. This one has not triggered yet. So you could see I put this out on, I think that was Monday. And you could see Monday we failed at the trigger, pulled back. A little bit of consolidation here. If you bring it out, looks almost like an inverse head and shoulders, possible cup and handle here. I still like this 5578 trigger here. I think we're still good to go on that. Next up is NOG. No trade plan on this. It didn't make the list, but it did show up because oil is back on the move. So, you know, I would watch for 2787 to hold. If we do hold that level, then 3068 would be our next target. Here's another one. BE did not trigger. Actually, apologies. It did trigger on Tuesday. Wednesday, we put an inside day. It failed at our trigger. So we should have stopped out of the trade there. And now we put an inverted hammer today. So watch for a potential retest of the trend line here. Might get a bounce off of that. We've got that 200 simple moving average right below. And then watch back through our trigger again. We want to wait for that daily close. Even though we got our daily close here, you know, when we failed at that daily close yesterday, we should have stopped out of that trade. Anytime you break out and then fail within a day or two, I generally will just take a small loss, or I'll move my stops up and just take a break-even trade there. Better to be on the safer side than to be on the sorry side. but the market has been running. So we do eventually get some of these false breakouts, and it looks like that's what we got there. So let's take a look at BRO. This one, another one, broke out on Monday. Tuesday moved higher. Wednesday put an inside day in. And then today we hit our first target right here at 72.97. You could see a little resistance here on Tuesday, a little more resistance here on Thursday. And so watch for one of two things. If we can get back over this level, the 72.97 level tomorrow, then we could start to grind higher to 76.21. But notice how we gapped over the entry. And so now we've got this little gap down here. So I don't like when I see that, because generally that means you're going to back test and fill the gap. And a lot of times when you see this back test gap fill on a trigger, it tends to fail. So just be careful if you did take this trade over the trigger on 70.42. We did achieve our first target, so we should be scaling out a little bit here, and move your stops to break even on the trigger. So if you do back test, you'll stop out, break even on whatever remainder on the trade you have. Keep in mind, TTM squeeze is still rising. We're not quite overbought on the RSI here. And I would expect if we do break this 72.92 level and get a daily close over, then we can target 76.21 to the upside. Okay, let's take a look at JNPR. Here's another one that triggered and did not backtest. Sorry about that. Let me fix that real quick. There we go. And so we had on the same, this is Sunday's call out, break of 35.93. You could see we got the breakout right here, very clean, beautiful close. Continuation the next day, right into our first target. Continuation on Tuesday over our target. We should be taking profit here. Spinning top yesterday, that generally signals reversal coming. Inverted hammer today, closed below that level. So we should have been taking profit here. We should move our stop losses to break even, and let's let the trade play out from here, because we can recapture this, right? We had a 4-day move higher and now consolidation. Let's see if we can get back over 37.34 and then start to move back higher to 39.20. And like I said, at worst, put your stop loss back at that break even, right at that trigger. Because what happens is if we do wind up reversing, you're taking some profit already here, but the rest, if you break out, if you stop out, break even on the rest, then that's okay. We got profit up here. TTM squeeze has still fired. We're still rising. We came slightly overbought, right? But look back here, you slightly overbought for a little while, and look at the move higher. Slightly overbought here, still moved higher. Slightly overbought here, and finally we reversed. So just keep that in mind when you're taking these trades. Take a look at RSI, take a look at the squeeze, note your target levels. Let's take a look at JXN. This one, I did put a trade out idea, and it did not trigger, right? This one came out on Sunday as well. So Monday, Tuesday, no trigger. Wednesday pullback, Thursday pullback. So watch for this to come into maybe retest that 50 simple moving average. I think it still looks fine. I don't think there's anything wrong with this trade. It just wasn't time to break out here. We just need to give it a little bit more time. Unless this retraces below the 50 simple moving average, and certainly below these previous lows here, then I think this is still a valid trade setup. So here's Microsoft. Caught a really nice trade on this on Monday and a continuation Tuesday. We put the inside day in yesterday, and then we broke that inside day to the downside. So definitely should have been stopping this trade. Should have taken some profit into 310, which was our first target. 315 was my next target. 320 didn't quite get there yet, but we do have the 200 and the 50 simple moving average just below. So it looks pretty good. It did fail at 309, but 306 I have as another level. I don't know if I have that here on the lower time frames here, but 306 is also a level that I would be watching here. You could see pretty much right back here, right? That rejection right there, 305.44. I think if we remain over that level, I think it's pretty good. Now, note on the 30-minute chart, we had a squeeze firing to the downside. You have RSI failing at 50. So it looks like it wants to back test, possibly that 306 level. Watch 306 to hold. If 306 holds and we start to bounce, we could take this back through the trigger and that back test of 306.04. And I would get back into this trade at that time. But for now, we should not be in this trade. Okay, let's take a look at Apple. I didn't put any trade ideas on Apple because for the simple fact of look at all these green days. I mean, what, like 2 weeks of green, straight up, nonstop, no pullback. So whenever you see that, you have to understand at some point it's going to start to pull back. So Wednesday, nice candle right through 177. Tuesday, spinning top. Thursday, failed. And so now we have to wait 174. Let's see if we back test maybe 172. If 172 holds, we could take it back through 177, and I would be targeting these all-time highs at 182. Next up is Bill. 238.45 was my trigger. You could see it failed. It actually broke out on Tuesday and then failed immediately on Wednesday, and now we're back testing swing high anchored VWAP here and the downtrend line. We also have a curling 50 simple moving average moving higher. So I would keep a close eye on this and see if we go back through the trigger. I'd be happy to take this back through 238.45. Let's take a look at HPE. This one also did not trigger. And you could see 1762. This went out on Sunday. Monday, we moved lower. Tuesday, we gapped higher and failed under 1762. Wednesday, it also tried to break through 1762. It could not. So when you see multiple rejections in a row like that, generally what's going to happen is the stock is going to pull back to its next prior support, came right back to that 50 simple moving average and held. So let's see if we can come back through the 1762 trigger. Very similar story. You know, as long as we hold this 50 simple moving average, I'd be happy to take it back through the trigger. We fail below this, the chances are likely that we test the 200, and then it kind of invalidates this trade idea. So I would revisit it at that point. Now, Roblox was not on the list, but I did put out a trade idea on that yesterday, or maybe it was this morning. Actually, I think it was this morning. But unfortunately, I was looking at this inverse head and shoulders. We had a false breakout through 52 yesterday. I was really hoping to get some continuation today, but the overall market did not cooperate. So for now, it still looks like a pretty decent setup as long as we close on the daily chart through $52. If we catch that 52, it's got some work, right? It's got some work to do, but my plan for this is over 52, you have this gap back here. So I think we can trade this up to about 66 on a gap fill. That would be my trade on Roblox. But let's keep a close eye on this for tomorrow into early next week. Did catch some flow on the 52s for this week and next week. So let's see if that actually comes through to fruition. And the last name that was on this week's list was UPST. Again, I didn't put a trade plan out, but it looks like a fairly decent setup. It's got a nice wedge. It's made a higher low, series of higher lows, but we've also making lower highs here, which gives us this wedge formation. We've been hovering around 50 RSI here, and we also have a 1-dot squeeze setting up on the TTM squeeze. So we did fail at the 50 simple moving average here. So it's possible we see one of two things happening here. Either we fail again at that 50 simple moving average, and maybe we back test the wedge and then come back and give us our true breakout, or maybe we get a continuation here. I mean, obviously you could still fail down here, right? But if the market remains fairly strong, which it has been, you know, I would expect some upside at some point in the near future for UPST. Now, keep in mind, you know, the market has been running pretty hard for the last 2 weeks after FOMC. And so we have to expect some pullback and consolidation before we move higher. The markets don't go up in a straight line, nor do they go down in a straight line. They tend to have these points of confluence where they bounce, and that's where we could see, the opportunity to pause, take a moment, observe where the market is, and then make our decisions in terms of where we're going to take trades. So now that we've gone through the trade plans, let's take a look at some of the trades that actually performed pretty well. Some of the call outs that I've made in the last few weeks. There's a lot. I'm not going to be able to get through everything, but happy to go through some of these trade ideas, and let's talk through some of the psychology of why they worked. So here's LAC, had a great day today. This is Lithium America Core. So lithium is in high demand, and with commodity prices rising, this was a really good call out here. So the call out was on 311 on the break of 29.50. We got the breakout right here. Beautiful continuation right into that 618 retracement. Back tested the 50 simple, the 50 Fibonacci retracement here, came back through, retested, and crashed right through that 618, right up to that 786. And now we got a nice continuation through the 786. I would expect we should test 4160 probably next week. But of course, when you have a trade like this, look at the RSI here breaking out of the wedge. You had a small squeeze set up that fired to the upside. I mean, this is just telling me everything I want to see in a chart. And it did exactly what I was hoping it would. It's coming back to test these highs back here. We tested that today. And so when you see a trade like this, I'm just going to use round numbers just for example. If you take 100 shares here, you should be scaling out maybe 30% here, maybe another 20% here, another 25, 30% here, and then you could probably scale the rest of the trade out right there. Now, if it does continue higher, you can re-enter with a tight stop loss, but I'm looking more at clearly defined trades at this point, whether it be with options or with shares. I don't usually offer options strikes because there's just so much, it really depends on what type of trader you are. Are you a short-term options trader, a long-term options trader? I'd much rather focus on teaching you the right way to trade and allowing you to trade the way you trade versus me saying, well, I'm going to take the 30 C's for next week on the breakout, because that's my style of trading. It may not be your style of trading. So just know that the one rule I use when I do options trading is I never go further out on the chain than my next target. And so over 29.50, I would be looking at the 32 C's. I don't normally like to play same weekly options when it comes to names like lithium. If we're talking about Apple, Microsoft, Tesla, Nvidia, those types of names that have a lot of liquidity in their options, then I don't mind playing the weeklies. But when I look at a name like Lithium America Core, they may not have as much liquidity in their options chain. So I have two options. I can go 2 weeks out, or I can go out to the next monthly, so long as the next monthly strike is not next week. And that's generally how I play these names when it comes to options. Okay, so next up is ENPH. This one was a break over 183. We got the breakout right here. Beautiful release on that breakout right to our first target at 196.95. You can see we're consolidating in that range right here. And I mean, we're back testing. Let me clear this noise real quick. You can see that we're back testing this level right here. So let me zoom that out a little more. And so you can see we broke out on Tuesday, we retested on Wednesday, we continued today, and we've been pushing highs. We did close over yesterday's high, but we did not close over Tuesday's high. So I want to see us hold 200. I want to see us close over maybe 202.50, and then we could start targeting 216.63. So although I have targets above this level, please understand that the 618 is the level that you need to watch when a stock is retracing from a prior swing high, which we have here, to a prior swing low, which we have here. When you get the move back higher, you always need to watch this level. The 618 retracement is generally the level that stocks struggle at. And it doesn't mean that they can't break out over it. It just means that when they hit that 618, you're either going to flag and potentially break out, or flag and then back test the 50% retrace. So just make sure that on that 618, you're starting to take profit and you're starting to move those stop losses up. You know, it's good risk management. Lock in those green trades. A lot of the names that I've been calling out, they go green and they sometimes stay green for a while, but you need to exercise proper risk management and manage those trades when they break out. You know, the other thing I like to do is to use ATR. And so ATR, I just turned on this blue line. This is generally after a stock is moved, and let's say we're up more than 7-8%, I would throw ATR on as guidance for where my stop loss should be if I want to stay in this long term, right? You could see, even if I got down, let's say on a breakout over here, we don't stop below, and I'm using a tight ATR of 2. Sometimes I use 3 on the wild stocks, like a Tesla that's got a wider range, a UPST that has a wider intraday range. I'm going to use an ATR of 3. Here, I'll show you what that looks like. Just turn 2 to 3. Gives you a wider berth. But this keeps you in the trade, generally speaking, for a long time. It allows you to endure those pullbacks. All right, so let me turn that off. And let's talk about US Steel. I mean, beautiful, beautiful trade. Now, initially, I missed the first breakout. I did not alert this on the breakout here of the downtrend line. It wasn't on my radar at that time, and I missed it. So did I call it out here or here? No. I waited till we got right back up here, and I said, okay, watch. We're coming into the prior highs. Watch for a break over 30.57. Now, we got that initial breakout. We hit our first target, and what happened? We gapped down the next day below our trigger. Here, you should have stopped out. You could take a small loss there. But the next day after that, it breaks right back through. I'm back in the trade. Comes back up to that first target. I'm taking a little off. We back test the trigger again. And now we bounce. We're back through. I'm taking my profits into the 1618, right? There goes that 618, that pesky 618. What happened? We failed at that 618. We back test a little bit, and now we're right back at that 618 again. So this is a little different. Now we have a swing high, we have a swing low, and we have extensions above those swings. So very much like the 618 retracement in between the swings of the high and the low is the same concept on the extensions. Watch out for the 1618. It's generally where these trades like to terminate. And so look at what happened here. We got an initial break over the 1618. We tried to hold it, and then we back test, right? I'm out of the trade here. What can I do next? If I'm out of this trade completely, watch for the break and close over 38.25. We can retake the trade here with a tighter stop loss. And then we could target 43, and then whatever the next targets to the upside will be. Generally, when we cross this line, I'll put out a trade update, and I'll give you some more extensions and some more price targets to the upside. We also got that golden cross back there. Look at what happened with RSI over here, right? We're overbought. But as we're overbought, right, price is going higher. So just because you're overbought doesn't mean the trade is over. I actually think, from my perspective, when we are overbought, to me, that's bullish, right? This is bullish momentum right here. And, this just shows you what happens when you get into those overbought conditions. But I would never use RSI, whether you're overbought or oversold, as a signal, as a single signal. It's not. You have to take other things into consideration. Let's take a look at CF. This has been a monster trade here. Let's just get that tool here. So the initial trade went out on February 11th over 74.77. That's right back here. We made a monster push to that 618. It just kept on going. Then we put it in a nice pennant. We gapped over the pennant. We came up to the 3618. We came near the 4236. Reverse right back down to that 2618. Bounced right off of there, and now we're holding under that 3618. So it's a little messy. Let me clear that out. Let me also fix and extend these Fibonacci levels out some more. There we go. So yeah, you could see very clearly, I mean, this was just a strong breakout. And every time you see like a strong breakout like this, you get that consolidation. Sometimes it's a flag, sometimes it's a pennant. This one happens to be a pennant. It broke out, gapped over the pennant. And like I just mentioned before, just a monster trade. And so this one, you should be trailing a stop. What happens if we put our ATR trailing stop? Doesn't close underneath. Let's see what happens when we put 2. Don't get a close underneath. You deviate down here, but this is closing over. You can't, you have to be careful not to trail your stop too close. You have to let the intraday play out. And if you close under the ATR, then you manually stop out of that trade. That's just one way to do it. For those of you who don't want to manage the trades on a daily basis, then you can use a trailing stop within your program, whether you're using Thinkorswim or TradingView, some of the other, trading platforms, they do have trailing stops where you can put in a 5% trailing stop. That would keep you in this trade until probably this wick right here. This wick probably takes you out. This wick is what I call a stop loss hunter. It takes you right out of the trade. And listen, if you got in here and you stopped out here, it's still green, right? So that's the point. We want to de-risk these trades once you're about 5 to 7% in the profit. Okay, let's take a look at MP. Let me close out that trailing stop. And so here we go, another entry. This one was last week, over 51.30. Caught that breakout right here, came right to our first target, started to fail, and now we're back higher, right? We're putting in a lot of upper wicks. I don't like to see that. That's generally selling pressure. But as long as we hold over 55.70, then it's a good chance we could test 64.86 in time. These trades are really straightforward. I try and keep the charts as clean as possible so that you understand how to trade them. Here's one that's triggered twice. You can see Expedia. Initial trade went out on February 8th, right around here. We got that breakout right here. Made a nice move through our first trigger, back tested, came right back higher, back tested, and it failed. Failed all the way back down, even failed our ascending triangle, and then came right back higher. And now we're holding over the trigger again. Came back up to that first target again. So, this one also looks like it's flagging here. Watch for a move back over 202, target 220 to the upside. Let's take a look at ADM. This was over 78.05, right? First entry there, broke out, back test that first target, broke out, back test that second target, watch it come back up to 94. If we put our trailing stop on, does it keep us in the trade? Sure does. No daily closes under that ATR. I can show you this all day, every day. If you use this ATR trailing stop, it will keep you in the trade. Absolutely will. Let's take a look at KR. This is Kroger. So this one was a little tricky because this one gapped on earnings. So trade alert went out back here. Trigger was over 45.32. We got the trigger. It wasn't enough for me to hold through earnings, so I closed out the trade here, and then we gapped on earnings, came back really high. We made a move up to 62, and now we're consolidating. We're consolidating under that second trigger of 57.18. So, excuse me, it looks like we did get that breakout today, and we're over that gap up anchored VWAP. So, nice trigger today on Kroger. Watch for a move up to 58.78 and then 65.11 next. Next is CRWD. This is CrowdStrike. Here's an instance where I put out a trade idea and I doubled down. I put out a second trade idea. So first trade idea, break of 193. Look at this beautiful breakout. Barely any consolidation until the top end of the range at 224. So while I saw this moving higher, I'm like, this looks really strong. I saw this band of resistance here. So I said, second trade idea, add to the position over 206.91, second entry, right? We got it. Where's the target? Up to the 200 simple moving average. Where did we hit yesterday and today? The 200 simple moving average. Close this trade out. It's just a trade, right? Don't get married to your positions. You can take these trades up to these areas where they terminate. Let's take a look at PANW, another one. Two trade ideas over 537, monster breakout. Over 572, second entry, another breakout. This thing just continues higher. So nice move there. Let's take a look at Cyber. 163, we broke out, we back tested and held. We hit our first target at 618 at 172.51. You know, it's still looking pretty good, but, you know, we have to be cautious if we don't fail here. I would de-risk this trade and move your stops up to break even. Let's take a look at Antero Resources, AR. Another one. First entry over 2170 here. Second entry over 2617 here. Beautiful breakouts on both entries. Can keep going, right? Arch. First entry was over 103.62. We broke out. We back tested. We moved up. Back tested the first trigger. We moved higher. Back tested the third target. Moved higher. Now we're consolidating over this third target. Great trade. Let's take a look at XEL. Another one. Broke out, failed. Came back, take it that second time, hit that first target again. Let's take a look at Costco. Daily close over 550. Broke out, retested, bounce. Back through all-time highs. Now making new all-time highs today, although it did close with an inverted hammer. Let's take a look at Zim. Over 74.59. Broke out. Now, this is just a heads up on this here, this gap down. This was a $17 dividend. So you got paid out $17 a share on this dividend, which is why price came down. But it did continue to come down after the dividend spend. So watch this back through the trigger to move back to the highs. Next up is Dollar Tree, DLTR. Trigger was through 144. I had this in a wave 5 on this breakout. Look at where we're going, right to that target zone. So I would be, you know, I would be closing out and booking some of this profit because it does look like somewhat of an ending diagonal here. So just be careful if you're still in this trade. PTSG just broke out last week, but looking to back test our trigger here. NUE broke out. This is 315, broke out of 128, back tested, failed. Broke out the next day on an inside day. Then the day after that, broke the inside day to the upside, hit our first target, back tested the trigger, bounced. We're moving higher. Where do we stop? 1618 extension. BE, this one triggered and then fails. It happens. LMT, another great trade. Back on the trigger here. Look at that move off of that trigger. Beautiful. ABBV, another one. First entry, I don't have it, but first entry was on the break of the cup and handle. Second entry was over 138 here off of this consolidation. Move higher. Now we're at that 3618. Watch for a move next to 170. Let's just take a look at a couple of more. By the way, if you have any chart requests, feel free to drop them in the chat, or any questions that you may have, you can also drop it in the chat. FMC, break over 119, got the breakout, got the first target, got the second target. Now we're consolidating on that second target. Johnson & Johnson, trigger was over 173, got the trigger, hit that first target, back tested it, bounced, hit our second and third targets, failed right here at our third target. Why did we fail there? All-time highs back here. Not a surprise. SCCO. This is Southern Copper Corp. Trigger over 65.87. Got the trigger right here. Broke out, back tested the trigger, gap down, little orphan candle, came gap back up the next day. Now we're right back up to the highs. You know, a lot of opportunities here. You just have to manage these trades properly. Let's take a look at FANG. Did not break. It actually broke our trigger for 1 to 3 days and then back tested and failed. So, you know, not all trades break out and continue higher. Sometimes they do fail. That's why we put stop losses. That's why we de-risk these trades. We still have a TTM squeeze fired on this, so it's still potential for this to move higher. Excuse me. Next up is NVIDIA, 319, daily close over 267. Got that close here, hit our first target, came close to our second target, and now we're consolidating. HCA never broke out. RTX broke out and back tested. TRV 174 broke out, never looked back, just continuing higher. Look at the TTM squeeze firing right here, right before the breakout. TTM squeeze fire came into overbought conditions, started to pull back. Sometimes it happens, but that's why we used, you know, the tools that we use. They know how to tell a story if you know how to read it. Let's look at the last one, MEOH, and listen, there's more. There's plenty more. This one, 308, initial breakout, failed, came back down, back tested the rising channel, bottom, broke out again, back tested, held, continued higher. We're back at our first target here, $57. So yeah, let's take a look at that. You know, that's basically the names that I've been calling out over the last 4 to 6 weeks. Let's take a look at some of these chart requests. Let's look at JKS. So you could see Jinko Solar, similar to ENPH, except ENPH actually broke out and continued higher, whereas this one, to me, it just didn't have as optimal as a setup. I think for Jinko Solar, what you have to do is wait for 63. I would say wait for 62.21, give or take. That puts us over our wedge. We're back over the 50 and 200 simple moving average. And we're back over this band of resistance up here. I think any other trade but that, you know, you're risking this just chopping around in this massive wedge. And look, this massive wedge has been going on since October of 2020. So you have to think, do you want to put your dollars to work on a name that's possibly going to go sideways? Or do you want to put your dollars to work on some of these names that I've been calling out that have just been going higher? You know, that's where you have to determine what type of trader you are. Let's take a look at SQSP. This one does not look so great. So I guess it's a newer name. We're stuck underneath that center channel. I think if you were to even entertain taking a trade here, you got to wait for the breakout over this trend line and then watch, you know, maybe this level right here. I think probably, what is that, like 30? Yeah. So right about 30.62, I think it's safer to take this. And then you're probably looking at targets of 33, 40, 48, 54, and then possibly 64. Those are your levels above, just roughly speaking, because I did them pretty quick. However, look at what we have setting up down here. We have a TTM squeeze setting up with a rising momentum. So watch for your TTM squeeze to fire. If we get a break over the 50 simple moving average and these levels here that I mentioned is 30.62, possible to catch a move up to the 200 simple moving average here, right around 39.25. I think that's a possible trade you could take, right? It would be about 28% move. So it's a pretty decent move. I don't know. Oh, actually, it's Squarespace. Wow, I didn't even realize that, SQSP. So yeah, I like the name. I'm not too familiar with how it trades. Obviously, it's a newer IPO. The one thing that really concerns me is we are below the IPO price. And a lot of the times when you have a stock that's like post 12 to 18 months IPO and it's below IPO price, it's better to wait for these names to consolidate and build a base out. Right now, I mean, it might be building a base, right? It might be. It's very hard to say. So wait for this consolidation, wait for over 33.30, ideally, to take this long. In the interim, you can take a trade over the 200, excuse me, over the 50 to the 200, but I think it's a riskier trade. But it would be, you know, it would be a decent trade to take. But if you're looking to go long, I think you really have to wait for over the 200. My rule of, one of my big rules is when I'm going long, I don't take any trades over the 200, under the 200, I should say, unless I am absolutely in love with the company. Like, there's some names right now, big tech companies that fell below the 200, like UPST. I like what UPST does. I think they're a disruptor. I don't see Squarespace necessarily as a disruptor in their industry. I think there's a lot of, web hosters and website builders out there. I think the space is crowded. But like a UPST, very different story. They're still a newer IPO, but they're disrupting the lending environment. So just to give you my 2 cents on things like that. And if you have any follow-up questions, feel free to drop them in the chat. Okay, Redwire, another company that I'm somewhat familiar with, but I mean, it's just ugly. It's really ugly. There's your IPO right there, well below the IPO. Now here, so here's a great example. This is interesting, right? So this is what I was saying about watch the 50, right? So you have a test of the 50 simple moving average here, you fail. Test here, you fail. A test here, you fail. We break out, we retest. There's the trade right there. That was the trade to take on Redwire right there, right? Let's see, that would have been a 50% move in about a week and a half. That's the trade, right? Now we have to wait. We have to wait to see, can we close over the 200 simple moving average? If we can, then you got to watch this band of resistance up here from the IPO. If we can get back over 1122 or so, then I think we have a chance to continue to make higher moves. But this is a nasty sell-off, and we're only just starting to recover now. So I would not be entering here. The ideal entry was through the 50 simple moving average down here. But now you have to wait and see. Do we get a rejection off of the 200? And then do we pull back and maybe back test the 50 again? Really too early to tell, but just giving you a little bit of my thoughts on how I would approach that trade. So let me know, gentlemen, or ladies and gentlemen, if you have any other chart requests or any particular questions about, my trading or my trading style or the way I'm approaching trading at the moment. I'll give you a couple of minutes. While I'm waiting, I'll just take a look at UPST and tell you what I was thinking. See how we broke out of that 50 and came down, and now we're fluttering around that 50. Ideally, I want to see a breakout over this wedge because we're over the 50, we're in between the 50 and the 200, and then there's a nice move right here, right to the 200, right? Nice 50% move. I'm ready to take this trade, but I'm also disciplined enough to remain patient. I think that's the most important thing we can do, is just remain patient as traders, especially with stocks that are under a declining 50 or a flat 200. Certainly things that are moving lower. This is not a buy the dip environment, because the dip can dip lower and dip lower and dip lower and just wear you out. So important to really focus on the relative strength in the market. And as I've shown in, at the top of the hour when I was going through the trade ideas, I think the win rate on those trade ideas is probably like 80 to 85%. There is relative strength in the market right now. You just have to, either follow along with somebody that knows what they're looking for, or learn how to scan yourself and how to find these relative strength winners. Every day presents new opportunities. You just have to sometimes get out of your own head and get away from the names that you're used to trading, because those aren't necessarily the names that are moving every day. You have to learn how to chart. You have to learn how to scan and how to build watch lists and to scan off those watch lists. That is a process. It took me a couple of years to really fine tune my strategy. And the thing is, I could certainly teach you my strategy, and that's exactly what I do in the university. The difference is not everybody trades the same. Everybody's got a different trading psychology. Everybody's got a different trading style. My edge may not work as your edge. And so what I can do is help you find your edge. But to directly copy my style of trading would not serve you the best. All right, let's take a look at a couple of other names. It's another one. When you get into stocks that are under $10, they tend to not function very well when it comes to technical analysis. So it's very difficult to do proper TA on some of these, some of these names. But you could see Bitfarms has basically been consolidating for a year now, a little more than a year. So from back in February 11, right? You had a series of lows, right? You got a low here, you got a low here, you got a low here, and then you have some highs. You have a high, high, high. Actually, what I can do, just to illustrate this a little better, you got a false breakout right here, right? Tricked you into thinking you were going to go higher, but look what happened. Little gap up right there. Wants to close that gap, but then it fails. So let's take a look at HUT. I'm familiar with HUT, another one that's been beaten down pretty well. Failing at this trend line here. So what I would do then is put a counter trend line here. There we go. So crypto's been moving, but I'm more in the Mara camp. It's already broken out and starting to move higher, higher, low, higher, low, higher, low, higher, high, than the HUTs of the world. Even Riot, I think, looks a little better too, right? Nice bounces off of this wedge, cleared this zone right here. You could see prior support back here, turns into resistance here, breakout, retest, but we're stuck in between that 50 and 200 simple moving average. So we're a bit in no man's land, but with HUT, you could see the difference in the chart. It's under its 200, it's under its 50, it's in a declining channel. It's not ideal it's not as ideal of a setup as some of the other comparable names. And this is where understanding how to scan for relative strength in the indices and then breaking down the top names within that index and finding the relative strength within. So goal number one, find the relative strength in the market in terms of sector. Step number two, find the relative strength within the sector of those charts. Let's look at Disney. Yeah, I mean, it's just I have Elliott Wave this one out. Think bottom might be in here, right? Possible double bottom right here, but we're still under the 200. We're under a declining 50. I think if we get a daily close over the 200, possible to take this. Now, take a look at the squeeze. It fired to the downside, price pushed down, squeeze momentum is starting to wane, right? Here's something that I haven't talked about today yet. So you see this series of higher highs on RSI, and you see lower lows. So excuse me, I meant to say higher lows here, right? Higher low, higher low, higher low, lower low, lower low. This is positive bullish RSI divergence. It generally will signal a reversal. Let me show you the opposite. You see this high here, higher high, higher high, higher high. You see RSI here, lower high. That's negative bearish divergence. What happened? Reversal to the downside. What can happen here? Reversal to the upside. What gives me confidence that I'm right about this? Well, it looks like an ABC retracement with wave C being a 5-wave move down. Here's wave 1, 2, 3, 4, 5. Now we're getting a double bottom here. That's another thing that, it's giving me a little confidence. What you could think about doing if you were to take this trade, keep your stop loss underneath these lows. It's a minimal risk for a maximum gain to the upside. So just something to keep in mind. Okay, we have a question. Can you explain the 820 and 921 moving averages, why some prefer one over the other, better use for different time frames? Great question. I prefer the 821 over the 920. And honestly, there's not that big of a difference. Whether you use the 8, the 9, or the 10, the 20, or the 21 is irrelevant. They're basically the same moving average, slight difference. Where you get some difference is in EMA versus SMA. On the higher time frames, daily, weekly, I like to use SMAs unless I'm using the 21, where I use an EMA. If I'm on the lower time frames, I'm generally going to use the EMA stack of 8, 21, 34, 55, 89. You see these lines here, right? So why am I using those particular moving averages? Well, number one, very simple. They're Fibonacci levels. 8, 21, 34, 55, 89 are all Fibonacci numbers. They correspond to the way I trade. I use Fibonacci heavily in my work, just like I use Elliott Wave. Now, if I were to take all these off and I were to just use just one moving average, the most important for me, the most important moving average is the 21 EMA. And let's see why. So here is the 30-minute 21 EMA on Disney. And you did the chart request on Disney. I didn't have this pre-planned. So you got to break out over the 21 EMA. You get too extended. What happens? You snap right back to it. I like to use the 21 as kind of like the light post or the lighthouse for my trading. Whenever you get too far extended from that 21, you generally snap right back. You get too far extended off that 21, you snap right back. Too far extended below, you snap right back, right? Snap right back. Too far below, snap right back. And so this is a good rule to use. And again, it depends on if you're day trading or you're swing trading. You're going to have to adjust your time frames. But if let's say you're day trading and you're looking to take a breakout trade, right? If you're too far extended on the 30-minute above that 21, you got to be really careful because the chances are you're buying the top. If you are, let's clear this off really quick and let's go up to, let's say let's go to a 65. Let's go to a 2-hour. If you're swing trading, or even like a 4-hour, if you were swing trading, it's the same principle, right? If you get too extended on a 4-hour chart below the 21, you're going to snap back. Get too far extended over the top, you're going to snap back. And so I had somebody ask me, I think it was last week, can I use just bullish over the 21, bearish under the 21? And the answer is you can, but it's a lot more complicated than that. It's you can't use one indicator, to define how you trade. In fact, there are a lot of traders who don't use any indicators at all. They just use price action and support and resistance levels. And I very much trade that way. However, I do like to use moving averages and Fibonacci and TTM squeeze and anchored VWAP to assist me in my trading. I use RSI for divergence strategies. However, the caveat with using divergence strategies is on the lower time frames, you get a lot of false signals. You can't use divergence strategies on the lower time frames. You can use them when you see them on the higher, like daily, weekly charts. They're a little more apparent, and they can be used effectively in that sense. But like anything else, I don't use one particular strategy for one particular style of trading. I do adapt my trading to the stocks that I'm trading, to the overall market environment. It really will depend on what you're trading, what's going on in the overall market, and just what's going on in the name, what's going on in the sector. These are all things that you have to take into consideration when trading. It's not a one rule or one system fits all. And that's why I really recommend sticking to a handful of names when you're trading, or especially earlier on in your trading journey. Really understand the personality of the stocks that you're trading. And like I think Jason from TrendSpider was talking about, for the next few months, I'm only going to trade SPY. I've never done that in my life where I've only traded one thing, and he wanted to try that out. And I think that's super smart. I did that earlier in my career as well. I just traded SPY. And why SPY? Because, well, when I'm taking trades, I'm keeping an eye on SPY and the Qs. And if I know how they move, if I understand the personality of how those two names move, it's going to help me when I'm trading some of the names that move with it. Right? Technology stocks will move with the Qs. Some of the bigger names like your Apples, your Microsofts, they'll move with SPY. And so it's a strategy. It's an edge to understand that, if my stock is breaking out and SPY is neutral or flat or down, I have to be careful, because even though my stock is showing relative strength, the market might pull it right back down. So understanding where your stock is relative to the overall market is an edge. That's another way you can trade. Rain, I know you're joining us a little late. Do you have any chart requests or any questions? Anything you want me to go over? We still have a few minutes left. A Zoom user, I don't know your name, but let me know if I answered your question. Hey, what's up?
Time difference totally got me today.
Oh, no worries.
Oh man, I have to watch the recording.
No worries. Yes.
Overall, just with what happened today, especially like with the MOC to the sell side and stuff, that's probably most likely the portfolio rebalancing, right?
Yeah, good. That's a really great point. I'm glad you brought that up. So today is the 31st of March. And so it's not only the end of the month, it's the end of the quarter.
Yeah.
Yeah. So we're getting some rebalancing, but honestly, Raina, we're also coming into resistance. And so to me, it's no surprise that we've run into the end of the month into resistance.
Yeah.
And if you're looking at the SPY, I called up SPY here. We were due for a pullback. We've had a really nice run since FOMC. And so, you have to
Yeah.
expect that we were going to pull back at some point. It makes a lot of sense that the last 2 days, they've probably been rebalancing. So, and it could go back
Yeah,
into
I
tomorrow,
definitely.
um,
Yeah.
but I'd look for next week to continue to show a bit more relative strength. We'll retest these highs at some point next week. And the question is, do we get a rejection off of it, or do we break out and then continue to move back to all-time highs? I think that's the only, question at least that I have in my mind.
Right. And historically, it seems like April's a pretty strong month. But yeah, I was expecting this pullback to happen. We ran up really hard basically, and then of course there's going to be a pullback, and then with all the rebalancing and end of quarter. So I was expecting it, but when that MOC came in at the end of the day, I'm like, I've never heard that number. It was like 10 billion or something. So
Yeah.
I just wanted to get your thoughts on that. But that's about it. I'll listen to the recording, and
Yeah.
then I will I'll set up a session with you, because I do want to go over quite a bit of charts just to kind of
Sure.
position myself for like the next going into the summer and stuff.
Yeah, and great point about seasonality. So for those of you who don't understand seasonality, basically TrendSpider has this seasonality panel that tells us what the win rate for that particular month on that particular name is. And you can see, let me zoom this in. You can see April is actually the best month from a seasonality standpoint going back to 1993. Even if we
Yeah.
went back to, let's go back to post 2000, let's go back 20 years, 80%, right? So that and November, highest seasonality. Let's go back 10 years and see if that holds true. We can go back to 2012. So 90% with April, July, and November. So from a seasonality standpoint, it looks like SPY is going to have a good month. Of course, it doesn't always have to be that way, but the numbers are telling us chances are very, very good. So what I would start looking for tomorrow would be names that have also a very high seasonality for April. And those naturally would be where my eyes would go for the month of April. But a good call out on that, Raina.
Yeah, definitely.
So if there's any other questions or any chart requests that anybody has, feel free to drop them in the chat. Otherwise, I just want to thank you all for being with me. As you know, I do run this session every 2 weeks. Normally, they're on Wednesdays at 7 p.m. I'm just finishing up my writing class this actually coming week. So next month in April, we'll go back to the normal schedule of Wednesday evenings at 7 p.m. Eastern Standard. Yeah, I mean, always appreciate everybody that tunes in. There will be a recording of this that will be posted in the group chat. So look out for that if you missed a portion of this. And as always, I do appreciate everybody tuning in. I appreciate your time. I will be posting this on YouTube probably next week. I never post it live. I always wait just out of respect for my members, because I do go over timely trade ideas. But if you are watching this on YouTube or any of the other channels, feel free to drop a like and a follow on that account. It's greatly appreciated. And if you have extra time, please leave me a comment below. That also helps with the algorithm. So before we wrap up, there's a couple of more trade or chart ideas or chart requests that came in. So let's just take a quick look at them. I'm going to go to the daily chart. So this one, I guess I've never actually, looks like I have looked at this one before. Here's a breakout over 69, 65.95, back test, now continuation higher. So this one looks pretty good, although let's put on that 21 EMA, as I was mentioning earlier. And no, not too extended, right? But look, we pulled right back. I think that right there, that pullback on Tuesday, probably an ideal entry on this breakout, although we do look a bit extended to the upside. SLB. Let me go out to a weekly chart. Looks like a lot of price history because I've charted that at one point or another. Looks like a broken chart that is starting to move higher. So let's take a look. Looks like we've got a bit of a channel here. So what I would watch for is a break back over that center channel. So maybe over $44 in the next week or two, and that might trigger a move up to the 60s. And last but not least, CCJ. I really like this name. This is a great point. Before I even look at that, URA, right? That's your uranium ETF, okay? This is why I was talking about where is your relative strength. Uranium names have been moving. What's the number one holding on URA? CCJ. So I have been calling out trades on CCJ. You can go back here. Initial trade idea was over 28. We did break out. We back tested and failed, but we got caught right here with that 21 moving average. As I mentioned, you get too far extended, it's going to snap right back. You see it here too, snap right back. And now we're coming back up to those previous highs. So watch for a move on CCJ up to 31.34 and then over 31.34. Here are your targets up above, but I do like CCJ very much. So that's all I got for this session. Again, appreciate everybody in here. Make sure to give this video a like and subscribe to the channel if you get a chance and you like my content. And good luck in the rest of the week. We only have one day left for this week, Friday. And today is March 31st. It is the end of the week. So make sure you're looking at your monthly charts. It's a new month starting tomorrow. And as we mentioned earlier, seasonality for SPY, which is your overall market and your overall bellwether for the market, looks like it could be a very good month. So let's wait to see next week if we retest those highs after the quarterly rebalancing today. And if we do break those previous highs on SPY, I'll call up that chart as we close the session out. If we do break back over 458 next week, then I think, dare I say, all-time highs should come shortly after that. So let's hope that we get there. And I will be sure to follow some names that will get us there. It's not always going to be about the SPY. It's going to be about the names that are showing relative strength to the market. That's my MO. That's what I stick to. And I hope you guys are catching some nice names. We've been getting some really good trades the last few weeks. So thanks again for being with me. Once again, I'm Danny Naz. You can find me at the Pup of Wall Street on Twitter. Give me a follow and a like if you're not already. And I will catch you in the markets again soon. Take care, everybody.